Hello, this is Data Trader Pro doing a little evening update, December 28th, 2015. Yeah, it was a bit of an odd day in markets. We'll look at the sectors table first, where we're at now. The only thing really screaming positive was natural gas after a huge sell-off. That's a second 8 or 9% up day in 3 sessions, so yeah, but nothing else is really moving. Everything seems to be treading water, going down a bit, going up, going down. Year-end, SPX looks like it's going to be a flat year for 2015. I think it was the mark is 2058 SPX for open, and we're very close to that. I think we closed at 2056 and 2056.50. So could be a dead flat year. Could be a little bit positive or negative, but likely going this way just by a few points. Okay, let's move on to look at the indices. There's a little bit of divergence between the indices today. Russell looked good at the end of the day, but ended down 0.5%. Nasdaq had the least bullish internals, or I should say the most bearish internals, but ended up green, just barely. Very slight divergence, 0.5% roughly between the indices. Moving on. All the internals heat map shows that it was a red day, but it started off much worse than it looks at the end of the day. The Nasdaq 100 was about negative 12 to 1 on the advanced decline early in the day, and bottomed fairly early on, about 10:30 or 11 a.m., and continued moving up. Now, never went green, but despite the index finishing flat to green. So there are divergences all around. Negative internals, price fairly flat. Let's have a look at trend. Alright, our day type indicator called it a bearish trend day. That comes up at 10:15 every morning, 10:15 Eastern Standard Time. It compares readings off open of 4 major market internals on a weighting, and calls a day, whether it's a bearish trend day, bullish trend day, or a range or neutral day. Today was a bearish trend day. However, there was a recovery midday. I think a lot of that might have to do with the light holiday volume. We're between Christmas and New Year's, traditionally a very slow period in the market, so indicators may not be as reliable in the next few days as they normally are. So just a heads up and a warning. The dollar-weighted buying pressure stayed down pretty much the whole day. I mean, we just had a trend down, so markets rising on that is a little unusual, but as we said, that's part of the holiday volume issue, I believe. So yeah, let's move on. Tight range today, SPX 12 points roughly, not a big day. Breadth, we'll move on to breadth. Oops, can we do that? Let's move on to breadth, see if we can. Oh yeah, no, we are stuck. Okay, apologies, we had a little technical glitch. Moving along, breadth. Breadth was quite negative across the board this morning, as mentioned, but improved throughout the day. Note the white markers are your high, your low, and your high of the day. We had lows early on, but recovered to slightly bearish to neutral. Trends remain bearish to neutral, but that's a big improvement from how we started. The volatility space was very interesting today. I'd like to note that midterm volatility, the VXV, which is the 3-month version of the VIX, has been high for quite a long time, a number of weeks, despite so all these drops, recoveries, rallies, pullbacks, all that sort of stuff. Some traders in SPX options are looking at a volatility event on the horizon, whenever that is, and it may not be immediate, but their VXV being a 3-month or 90-day roughly volatility index, representing some fear a few months out from now, anywhere between now and a few months out from now. So that's something to pay attention to. Short-term volatility, that's the 9-day volatility index, VXST, remained well up, although it came off, it was down quite a bit. I believe it was in the 13s at the end of the week. So volatility space is coming up. Internals are bearish. The overall picture is of potentially a downtrend starting, but price keeps getting stick saved on light holiday volume. All right, same picture in the S&P 500 intraday. The advanced declines finished up around their highs of the day, which was still negative. Volume finished around the lows of the day, so not a tremendously bullish picture, even though price ended the day at highs. So divergences abound in this market. We're going to look at some block trades. We had, as was predicted, some selling up here on large volume on SPY. Lots of selling. We started a down move, but then that was saved. So this was at the end, near the end of the day, late last week. So this was, I guess, on Thursday, right? So, but we had the shortened holiday day, and then we were closed on Friday, and so I'm not sure if this is distribution. Price is still pointing up. It's above this cluster of block trades. We're going to have to see. The watermark basically for whether things get bullish or bearish are these cluster of block trades around SPY 206, 206.05, high 205s, 205.65. There's a lot of volume up there. So if price can move above there, things get bullish. Until that, I think we remain bearish based on the internals. Some more block trades on IWM at the end of the day. Not massive volume, but looks like a bit of distribution into the local highs. Same on QQQ. And in the volatility space, nothing much to write home about. With regards to SPX and its moving averages, you can tell we've had a bit of a seesaw move, down, up, down, up, down, up. So how many waves that is, I'm not sure, but we're going nowhere these days. We ended with something looking like a doji on SPX, but above key moving averages. So yeah, so we'll see. We'll have to see what happens the rest of the week. My bet is that we don't have a real sell-off until after we come back from New Year's holidays. So we're just kind of in a holding pattern. I think the market will be in a holding pattern price-wise. I don't think it's going to make any strong directional moves. That's it for now. December 28th. Thank you very much for joining, and good night.